Happy today.
Happy today.
So I just want to start out the show. I got my first ace yesterday in disc golf. It was awesome. I can't believe it. It was a tough shot too. It was not an easy shot. About 210, 215, dog leg left, and I banged it.
You caught the breeze just right.
I threw the right disc. So this hole goes out straight for about 150 yards, and then it breaks to the left real hard at the end. And there's all these trees on the left, and I threw this disc that I know fades really hard at the end. So I threw it perfectly straight out. It went out. It was like whoo, whoo, and then it started to cut really hard. I was like, nice, that was a good shot. And I heard ka-ching. I was like, yeah, no way. I hit the chains. Bull crap. I get up there. There's my disc in the basket. I made a video. It's up there on my.
Oh yeah. You shared that yesterday.
But anyway, let's get into it. The shows. Let's thank our sponsors: Quantum Expeditions, Quantum Economics, Bitcoin Live, Deorganized Media, and Shieldfolio. I think I got everyone in there.
I think you did.
And Nick should be flashing all the little adverts. Shieldfolio, if you're not familiar, you can put your seed phrase in there, and it's invisible to prying eyes unless viewed under the correct UV lighting. Quantum Expeditions, if you're interested, this is a way to invest in mining. And sorry, my producer is saying my camera's a little fuzzy. Give me a sec. Yeah, I will check my connection. And you get a 20% discount with the Shieldfolio. And what else? We got Quantum Expeditions, and I think that's everything. All right.
20%.
Today's show is Zetta is the new normal. And basically, what does that mean? That means that the hash rate of Bitcoin is approaching the normal range of Zetta hash calculations. And I think I have that pulled up here. Let me just switch over to the sharing button in just a sec here. Let's see. Share here. Come on. There we go. And it should be coming up in just a sec. There we go. And you can see just on April 4th here, Bitcoin hit 1.1 Zetta hashes. So this is a big deal. And this just happened, right, last week. We're on the 10th. So people are still mining. I know, Matt, you put up a thread of a guy just the other day. I don't know if you have that on hand. Him saying some of the miners, the small operations, were closing, but clearly by that, there's still a lot of people adding power to the network. And even if we look at the actual chart, let me go back to that screen real quick. And we look at let's look at it like a 1-year chart. You can see the spikes that are touching the Zetta hash range. It's happened here. It happened here. Now what happens is it doesn't look like it hit it, but the average comes down after they average the hash rate out over like 7 days and then 21 days and then like a month. It pulls that average of that day down a little bit. But you can see right here was that day the other day, and we're approaching into this new band here. This new Bollinger Band of hash power, and that's going to be that's going to be the new zone. And if we go down here, back down to the bottom here, why is that important? That just means the security of Bitcoin goes up by a magnitude of one more zero, right? So we're doing, instead of doing 1 quintillion calculations per second, we're doing 1 sextillion. And this, again, is insane amounts of power, insane amounts of security. And Bitcoin looks healthy. That's the main thing. Yes, there isn't a ton of activity on the network as of late, but let's pull up the ETF page, which I think I just had over here. And we can talk about what me, Matt, and Nick were just discussing. Let's see. It is CoinGlass's page. There we go. And the main thing I wanted to show on this page is IBIT looks like they are selling, but look at Fidelity. Fidelity bought 22,000. Oh, this was like 100 like 40 minutes ago. Now it's 22,200. And with the exception of, it looks like Grayscale's main Bitcoin trust and the ARC, everyone else is stacking Bitcoin. Green, 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 every ETF. And this is another important pattern I wanted people to see. The biggest outflows of the ETFs were right before the election. You can see these waves. You can see some outflows way back here, but these are like ripples. And then you can see these ripples get into bigger waves, then bigger waves. And then the biggest wave was right here, February 25th. And now you can see the ripples are getting smaller and smaller and smaller. And we can see the inflows are getting back into the green again. So my theory is it's only a matter of time before we see Bitcoin go boom again. It could be in the next few days, could be the next few weeks, it could be May, but it's coming.
200K end of May.
I love your slogan.
200K end of May.
End of May. It's got a nice ring to it.
It does. It comes off the tongue. It's fun to say.
It pops, baby. It pops.
I mean, but when you look at that, though, when you look at the hash rate, right? And you look at just some of this underscoring the data here. It actually isn't just hopium. I mean, who was it? I just saw somebody else on the timeline tweeting out 250K now. Like, I think there's like 200K enemy. There you go. But I saw somebody else tweeting it out as well. Like 250. Hold on. I'm trying to go back and find it, but go ahead. Sorry.
No, you're good. So the other things that, as people are, panic selling in, out of March and into April, it looks like, you have to realize that there's a lot of other indicators that prove that, usually when the masses think one thing's going to happen, usually the exact opposite. But you have to have data to back that up. And some of the newest data that we have is I did do a little research this morning on the reverse repos, and they're way down. And let me just switch to that page really quick.
That's a whole indice right there. I first started following the reverse repos back in September, October of 2019. And that was because of Mark Yusko, and he kind of hit me to that. And I started watching all that activity that happened in late 2019. And I honestly, and I'm not the only one who's actually come out and said this, but I've said this for a long time, is that I think that was one of the prime driving factors that led us to a big financial cliff that happened pre-COVID. And that could have been an impetus to what we saw happen globally as far as just what happened 2020 and beyond. You know what I'm saying? I'm not saying that's what caused COVID, but it did give people a lot of pause and a lot of cause, because what did they have to do? They had to mask all of that, right? So there was a lot of, again, fuckery. Can we just say fuckery?
That's a good word.
There's a lot of fuckery in the markets then. And now when you look at the repo markets, I know a lot of people don't understand what that means. And I'm not an expert on it, certainly, but I had to take some time to educate myself on what this really means. So the data that you're about to share right now, Jer, can you unpack that and explain why this is really important for folks, and explain it like I'm five kind of way?
Yeah, and that's what we're going to do, because that's one of my specialties, is that I can convey very technical stuff to people in a very layman terms, right? So here we are, and let's just read what Google AI has pulled up. So, and this breaks it down in like 5-year-old terms for us right here. So the Federal Reserve's reverse repo facility, it's also referred to as RRP, has a significant decline in balances, dropping from over 2 trillion to less, and it was actually 2.5, and you can see it in this chart to the right. We'll go to that chart in just a moment. 2.5 trillion in around 2023 to less than 150 billion just in the last, I want to say, couple of weeks. So what does that mean? So first off, what is a reverse repo? A reverse repo is when the banks realize that they're holding of their own money, their money will melt away. They take it and send it to the Fed, and the Fed gives them, like, it's usually the repo rates are based off of I think it's the Philly fund rate and the federal fund rate, and it's a little bit less of that, right? So it's like, if it's 5%, it might be like 1 to 3% in these reverse repos. So they take their money and they park it at the Fed. Now, and again, this is to protect their liquidity, right? So let's pull up the chart. Let's pull up this chart. This is that chart to the right, and we can zoom in on it. And this is what's mind-blowing. And I just realized it this morning. I was like, holy moly, where is it? Wolf. There it is. There we go. And so here's the deal. Literally, somebody becomes president here, and then right around 21, all the banks start parking their money with the Fed. $2.5 trillion. And then by the end of 2023, they start investing again right here, right? We can see that. But now it's down to here. And again, so they're not parking their money with the Fed anymore. What does that mean? It means they're sitting on their money and they're waiting for buying opportunities to enter the market. And I think that's what we saw yesterday. That's why we saw Bitcoin go up. That's why we saw almost, I don't know how many altcoins go up. And obviously equities rallied as well. And the thing about, people worried about China and Russia dumping our securities is you don't have to worry, because the bond market just jumped like 5% to 5%. I think let me check. I just pulled up the yields. Yeah, they were all, let's see, the 1 month. So our 20 years are almost 5%, at 10 years at 4.3, down a little hair, but the 20-year and the 30-year bonds are at 4.8%. So even if China and Russia dumped all of our securities tomorrow, like everyone and their grandma would be like, wait, 4.8%? Buy. So there would be some turmoil. There would be some volatility. It would be messy, but America, Trump is still making, in his end game, it's to force the Fed to cut rates and then drive everyone back into the bond market, stabilize the dollar, which is also now being stabilized by Bitcoin. And now the biggest news of the week, which you shared yesterday, and I was saying several months ago, which I think I shared, I don't know if it was the show before this one or the 2 episodes before, where I had this theory that there was a possibility that China and Russia were buying capital goods with Bitcoin. This could be a possibility. And that's why we're seeing some volatility in the markets, because they buy some Bitcoin, they let it go up like 5%, they sell it to Tether. If it's a big enough order.
They're doing the old degen game. Is all they're doing is they're just degening. We did this back in 2017, like, come on, man. Like, but now governments are doing it, and it's,
and that's the thing. It's not crazy anymore, because Van Eck comes out yesterday and is like, yes, that's happening. I was like, It's like when my theories become reality.
But you know what was really funny is if you noticed how carefully worded it was that it didn't say oil, it said energy transactions.
Yeah.
And so, like,
Okay.
you can't come out and say oil, but like, what else are they gonna? They're not doing coal. They're not doing liquid nitrogen or natural gas. There's only one freaking thing they're doing. You know it, and I know it. It's black gold Texas tea.
Oil.
It's what old Jed shot and came up out of the ground in the Beverly Hillbillies.
Exactly, because let's be clear, the Chinese oil yuan futures, that's what Russia and China have been, they've been crazy about for years.
Energy
and
trade.
They're going to be trading outside of the yuan and the ruble and the renminbi. The only other thing they're going to pick is corn. Let's be clear. It's really easy. Now they're like, wow, this is easy. Hey, like, no shit.
Things of note that also came up this week, I wanted to throw at you. Coming out of the country of Pakistan. Two big things from Pakistan.
CZ.
Yeah, CZ now is a strategic crypto advisor. And then the other thing was just yesterday, the government announcing that they're going to take their surplus energy, direct that and dedicate that to mining Bitcoin. Pakistan is going to start slapping some ASICs on there. So just curious, your thoughts on Pakistan, where you see them kind of entering the fray in the global market.
This is just good news for, all of our, mine and our economic theories that come out about Bitcoin, harnessing in cheap energy, wasted energy. Pakistan is seeing what TEPCO is doing, and they're not gonna be left behind. This is just basic math, right? If you're have flare, if you have a huge solar farm, you have this is why Mara added that wind farm. You have a wind farm, it's generating all this energy, and you don't have the customers. Well, Bitcoin's your backup, Litecoin's your backup, and you're generating revenue because your power isn't being wasted, right? This is a huge deal. This isn't the only country. I think CZ is their crypto advisor. I think he's like their crypto advisor for 4 or 5 countries now.
But I think the big thing is that when you have a government saying, guess what, we're taking our surplus power. There it is. Thanks, Nick, for throwing it up. Nick in the background of the Bitcoin Live Network, killing it. Pakistan plans using Bitcoin mining and AI data centers. So when the country says this, like, that would be like the equivalent of the US going, yeah, we're going to take all our surplus energy from them that we have, and we're going to hook up ASICs,
Exactly. And that's perfect segue into a video I have pulled up. Hold on, I think I had it pulled up. Where's my bookmarks? So, and this video came out, I think, like a year or so ago. But there's a very important point to this little video. Let me switch over. Give me a sec. Come on, computer. There we go. So it's Joe Nakamoto, and he's talking about this little mining / energy operation. I want to say, I think it's in the Congo, but it's coming up. Give me a sec.
What?
Bitcoin?
Bitcoin,
yeah. Have you heard of Bitcoin before?
They have it.
Yeah, they have it.
Yeah.
They have Bitcoin here. Yeah.
This is where the Bitcoin are made, and it's very loud and hot. The plant generates more electricity than the local community needs, so Gridless comes in and mines Bitcoin with this wonderful 100% green hydroelectricity. But the added benefit of this is that energy prices for the entire region start to drop.
Oh, I'm sorry, what was that?
On top of that, electrification is taking place. Listen to how Douglas explains it. Has this helped you at all?
Life is full.
Do you have light in the evenings now?
We enjoy. We have light. We enjoy screens. We enjoy everything.
What was your village like before then?
While we are cooking, others use some firewood. But now people are changing the lifestyle. Some are using now electricity to cook. Now they are using electricity to use their food for That light stop, you see. That is the reason why people are enjoying now electricity.
Is electricity cheaper now because of this?
Yeah, now people are enjoying.
Now they're enjoying electricity.
Oh, yeah, enjoying electricity.
Amazing.
So right there, we can see that it's happening in real time, especially in smaller markets like this in Africa, where instantly, with just in a year or so, the market price of electricity goes down because of this one operation, and it's not even a big operation. This is groundbreaking, proving all of our theories that we've talked about for the last year or so, playing out in real time. We actually played that video, well, not Joe Nakamoto's, but we played a video about that operation last year saying, look, this is how it's going to start out. And just 1 year later, energy costs are down. Do you see how Bitcoin fixes things?
The Deadwood is commenting. Thank you for streaming and thank you for watching. Thank you. How is the day treating you all? How is the day treating you, Gerald?
Again, I got my first ace yesterday, brother. Good to see from you. Thank you, Deadwood, for hanging out with us. I'm a big disc golfer. I banged, not only was it like 200 plus feet, it was a hard hole, like, and I'm having a great day. And I'm hanging with my buddies talking about corn and Bitcoin. Let's everyone crying about in their cornflakes about Bitcoin. Let's pull up a Bitcoin chart. Right, I think I have one over here. Trading view. There we go. Switch to this tab now. Come on, computer. There we go. Trading view. Now, if you look at this chart, does it really look that bad? This is a 6-month chart of Bitcoin, by the way. Not that bad. I don't know why everyone's crying. It actually looks pretty darn good if you look at a 6-month chart. Now, let's go look at the year to date. Not so good. Not so good. Let's look at 1 year. Still up. 1 year. Look at 5 years. Oh, only up 1,000% in 5 years. Let's look at all time. 731.
When in doubt, zoom out.
1,000%. 731,000%.
Everybody say it with us. When in doubt, zoom out.
Exactly. Now, one of the other cool things I wanted to talk about on the show today, hold on, where oh, there it is something I came across just the other day, and I was pause. I can hit again. There's computers doing their own thing. I literally, and did I save it? There it is. There it is. There it is. So I've been working with AI models for, I don't know, I want to say like 2 or 3 years. When they first came out, I started messing around with ChatGPT. And then I want to say the last 6 months, I started getting serious. I'm like, okay, let's see if these things are really good. Let's see what they can do. Right. And as a data scientist, I'm like, okay, let's give them some tricky equations. Okay, chat, I want you to make a chart comparing Bitcoin's price over the last 10 years to gold's price over the last 10 years. Do it. First thing chat says, nope, I don't make charts. Go to Grok. A couple weeks later, Grok, do the exact same thing. And this was Grok 2.0. I haven't tested this with Grok 3.0, so I don't want to diss Grok's latest update because I did some cool things with Grok 3.0 like last week and was like, whoa. But this is Grok 2.0, same thing. Can you make a chart? Nope, can't make charts. So I find this thing that MIT's literally teaching to their students in class now. Yeah, called Julius AI. And I shit you not, brother. As somebody who's a Python data scientist, I pooped in my pants as soon as I started using it. It literally starts coding Python. It's like import pandas, import NumPy. I'm like, what? And I asked it to do this. I was like, okay, I want a chart comparing Bitcoin's price over the last 10 years to gold's price over the last 10 years. And it's like, you got it. it's like trying, it's running the code, it's failing, it's running the code, it's failing. And it's like, I need more input. I'm like, no problem. Okay. Go get, where do you, it's like asking me, where do you want me to get the price information around? I was like, pull up Binance's API. It's like, no problem. She pulls up Binance's API. It's like, where do you want to get the gold?
Why did you choose Binance? Like TradingView.
What's that?
Why did you choose Binance instead of TradingView?
Just because I think theirs is more real-time accurate. Yeah. I'm just saying that dude, they do like 60 to 100 billion dollars in volume a day.
TradingView is pretty darn good though.
Oh, I know, but I'm saying the most of that's based
like
off of like who's the big boy doing all the business, and that's Binance and Coinbase. But anyway, so I used them, and then it was like, what do you want to use for gold price? And I thought Kitco might have a good price oracle, price feed, and they were like, no, they don't. I was like, oh, I was surprised. So it found one. It was like, how about this one? This metals, open metals API. I was like, use that, sure. And boom, it was like, here you go. And I was like, this is exactly what I was looking for. So here, let's look at this chart. I think, Nick, you should have it on the screen, I believe, right about now.
Right about now, my funk soul brother.
Yeah, so why you shouldn't be investing in gold anymore versus Bitcoin over the last 10 years. Do you see gold? And this is Bitcoin. And I knew this is exactly what the chart would look like. I was just trying to get somebody, one of these AI models to build it. And this Julius AI did it. I want to say it took maybe 10, 15 minutes to get to this final chart. But yeah, this is basically comparing the normalized price base unit as like 100 compared to gold over the last, it looks like 2014 to 2024. And yeah, gold's going up in that time frame, maybe from about 1,700 to about 3K. And Bitcoin in that time's gone from about 3K to 110K. So that's why that chart looks like that. But yeah, gold is not a long-term investment.
Hey, I got a chart I want to throw at you. I know I'm just throwing a curveball here, but this one just came up, and maybe Nick can find this one. Literally, the uncertainty under Trump has exploded. The U.S. Economic Policy Uncertainty Index is the chart that I'm looking at.
Ooh, pull it up.
Michael A. Arut is the account. And it's just when you look at the global pandemic where you see the U.S. economic uncertainty, then when you see 5 years later, it just skyrockets. And it's like one of those parabolic, I'm like, geez, people are more freaked out. Yeah, is that it? Did you get it? Yeah, Economic Policy Uncertainty Index. See, this is why Nick's the best. Bitcoin Live Network, man. Yeah, look at that, though. I mean, when you look at from 2020 to, zoom in on that one, Nick. Yeah, that's crazy.
I mean, it went up like almost as high. Actually, it went up higher when somebody else became president too, and then it came down off its high horse. So again, we're seeing a repeat, a wave here, and this wave behind it is smaller. So people, I think, are panicking a little too hard. I mean, again, let's. If somebody can pull up a chart of the S&P 500, zoom out again on the S&P 500. Literally during, I think it was like 2022 and 2023, there were some days where it was like dive bombing like 800 points, and nobody was like, it was big news on CNBC and like, all these business Bloomberg and crap, but the mainstream media was like, it wasn't like the sky's falling, the sky's rolling, the sky's rolling. And it's like, calm down, y'all. Like, seriously, here, let me just pull it up just so we can pull up some of those rainy days that the mainstream media seems to forget about. SP 500 chart. No, not the booty one, TradingView. Yes, and I do use TradingView a lot. Binance came up, and I was just testing the model to see what it could do. and it did it, dude. This Julius AI shit is dope. I highly recommend
And
testing it out.
where do I get it
You
at the end?
should get-
Julius AI?
I found it right on X, man. Yeah, check it out. So I literally, I think it's just Julius.ai.
Is that like
Yeah,
Julius,
here
like
is
Dr.
like
J Julius Irving, like Julius like that? Like
yeah,
Orange
like
Julius, where I'd go and get my
JUL.
smoothie, and I loved Orange Julius, man. As a kid, my mom would take me there at the
Oh, dude.
mall, and then we'd like get an Orange Julius, and then we'd walk the mall, and then we'd stop off at Miss Fields Cookies because man, you got to get it. Anyways, I'm sorry. I told you. Anyways, I'm gonna write that down though. Okay.
No, dude,
Grok,
I miss Orange
ask
Julius's
Grok, is
too.
that what
Those things, dude, it was like OJ with
yeah, it was
Tang
all whipped
almost. It
up
was
and
so good.
foamy. I love like the foamy
Yeah.
frothiness of a blended fruit drink. It's so good once it hits your lips.
Oh, dude.
You know what I mean?
Again, good stuff. But yeah, let's take a look at the S&P. Let's look at 5 years.
Julius AI.
So yeah, so 2020, boom, boom, boom. Look at after 2021 and going into 2022. Yeah, boom. Has 1,000 almost. 476.
Reminds me of the Matterhorn at Disneyland.
Yeah, it went down like, yeah, literally like the Matterhorn at Disneyland. Then it recovered a little bit, went down, like another.
Woo, look at that.
Yeah. Again, so all of these years
to get on that ride.
Yeah, dude, there were all of these in here, like this was nightmare scenario if you are like a day trader or a serious market investor in the Wall Street. And then to see like, oh wait, we're still here. Oh, I'm sorry. What was it? Oh yeah, 3,500, 5,200, and it literally was just at like 6,100. Notice that it was still in this half of what year? Yeah, and the guy was elected back in when? And was it here? Yeah. So it did all this while they all knew who was coming, right? So again, I think people are panicking a little too much. That's just my own theory. And I'm not even a huge Trump fan. I think he's smarter when it comes to finance than people realize. I mean, that's his expertise, right? He does effing properties, right? So you have to know how to refinance hundreds, and his loans are like millions of dollars.
I think really that is the big thing that we're looking at, with over 36 trillion in debt and 9 trillion of that having to be serviced or paid or refinanced this year alone. How in the F do we do that? Do we raise taxes? Probably not. That ain't going to fly. No. But we're going to cut military and Social Security? No, that ain't going to fly. So the only other answer, we're going to have to get some lower interest rates. And that's what this has been about since day one. This is actually what this has been about, in my opinion, since 2023. And the whole scenario around Silvergate and Silicon Valley Bank is that we had venture capitalists saying, hey, these interest rates are way too effing high. We can't make any money because their whole business model is predicated on cheap money and low interest rates. So then when they saw that administration was not going to work with them and give them the policies and procedures that they need, they said, F that. And all the money went to Trump and the Silicon Valley PayPal mafia, Peter Thiel and all them said, okay, and now look at what's going on. Who won the election? What happened with crypto? What happened with all these policies? We got Bitcoiners in office in key cabinet positions, and now he's driving intentionally the car off the cliff. It's like that Thelma and Louise moment to make Jay Powell, to make China, to bring these people to the table to renegotiate these deals, right? And a lot of people don't like it, and it scares the fuck out. I'm sorry, I'm going to use the F word. It scares the fuck out of them because they see us going towards this financial cliff, not knowing that at the last moment, hey, we're going to bail out. We got a parachute, and that parachute is Bitcoin.
Yeah, that's why we're getting heavily into Bitcoin right now. Is because
why do you think there's mining Bitcoin in America?
Exactly, America BTC. I saw a dope hat. And again, this is why we're going this route, is because we know China and Russia are going to eventually sell our securities, right? And they're subverting the dollar over the last 20 years using their asymmetric warfare, their asymmetrical economic warfare, buying up properties, shooting in the fentanyl, right? Using the cartels, laundering money, right? This isn't like, again, this isn't a Bond movie. We had a whole episode on this, right? This is real shit, right? That the Chinese are working with the Mexican cartels, and some of the South American cartels launder all their money. The Chinese launders all their money for them now and makes them billions of dollars and teaches them how to make fentanyl in America. And again, one guy let that go on, and one guy wants to stop that. I'm for the guy that wants to stop that. Sorry. I lost a friend to fentanyl, and he doesn't do heroin, right? He doesn't do like those type of seriously messed up drugs. Yeah, he liked the snow cane, but still, like, who does that? That's evil stuff, man. When you're putting in like these chemicals that will literally end people's lives. Like, who puts fentanyl in the marijuana? Are you tripping? Right. And this is a thing. And again, this isn't made up stuff, right? So they've been doing this economic warfare against us and subverting the dollar in many different environments, right? Many different circles. They've been subverting the dollar. And if we put Bitcoin as the anchor to our economy, oh my gosh, it saves our ass like almost overnight. Look at El Salvador. Right. That's all I got to say. El Salvador was way worse off than America is right now. I would say by a factor of 20x. And if America goes this route, Bitcoin pulls America back down to earth. Right. It slows us down. That concept, that economic concept that Bitcoin slows down the web 2.0. People don't get it. Update. Well, guess what? You can't do an update like that on Bitcoin every 10 minutes, like Google, Apple, and all these other networks that force these updates on you. And this is another reason I've gotten away from Ethereum, because it's like update. And you miss one update. Oh, where's my money? Oh, poof, it's gone. And this is why Bitcoin's superior and Litecoin are superior. Full stop.
I don't even want to talk about Ethereum. I've got friends in that community, Gerald. I've got friends in that community that work hard, that have families. Okay,
and I still have
look, they need to feed the kids. They got to put shoes on their children's feet. I've got friends that are working hard over there in the Ethereum community, and I want them to succeed.
Man, I just tell it how it is, bro. It's not a long-term investment. It's like the dollar. It's not a long-term investment. But they're trying to protect the dollar now, right? Like, that's what all this stuff you're talking about with the reverse repos and the bond markets. They're trying to protect the dollar. And that's another thing you can do is you put Bitcoin on the balance sheet, which the president did. That protects America in a very it's a very obtuse way, but it's a very serious way. Having that stash of 200,000 Bitcoin. And if we add onto that balance sheet, if Bitcoin, it's not if, when Bitcoin hits $1 million, if we have 1 million Bitcoin, oh, we can pay off a lot of debt real quick like that. And that's what is in play right now. I mean, this is what it's all about. That company, Gridless, again, I would like to work for you. Gridless. Hi, my name's Gerald. I'm a data scientist. I'm really smart. I know a lot about Bitcoin and energy. Those guys are literally...
Boy, you're shilling that harder than I've seen you shill a meme coin, bro.
Yeah, for real. But Gridless doing exactly what we've talked about over the last couple of 20 months or so. Was it 12, 16 months? I think this is episode 40 something, 30 something. So the last year or so, we've talked about how Bitcoin is going to become this amazing carbon credit, distribution credit. It can be whatever you need it to be, but it wrangles in all these energy issues. And then instead of people wasting all their time and all their budgets on military and or dumb crap on the left, we're investing in energy projects, creating revenue streams, and literally building communities like that one we just saw, where the price of electricity was going down. The guys are like, oh yeah, Bitcoin, we have it, I like it, my life is improved. Hello, Is everyone paying attention? Oh, okay, good. Glad on the same page. But that's, you know, that's where we're at.
Bootstrap and solve that. Uncle Marty right there. Tales from the Crypt. Marty Bent. He's one of the best. Guy's an OG, man. Marty Bent. You ever listen to his? He was doing podcasts way back in one of the first crypto podcasts, way back in the day. Tales from the Crypt.
Oh yeah, share
And,
away. Go ahead.
Yeah, he and Matt Odell share that.
About to rip the red tape off of nuclear, particularly SMRs. All these SMR companies want to go to remote areas and replace like diesel generation with nuclear, but they had the problem of the time cost of capital problem, where you can build an SMR, you can get it to this place physically, but it takes 18 to 24 months to build out transmission. And so you can actually bootstrap and solve that time cost of capital problem by putting an SMR down and then co-locating a Bitcoin mine right next to it behind the meter. And then as you build out that transmission over the course of a year, 2 years, whatever it takes, you can actually monetize the energy before you connect it to the grid. And so that has been one of the big problems for SMRs, as I understand it to date, as they have this time cost of capital problem for transmission and interconnect that Bitcoin can solve. And so you can see Bitcoin being a mechanism to begin to bootstrap that distributed SMR energy grid. And that's the beauty of Bitcoin. It's location agnostic. The shares that this miner is sending to a pool are kilobytes of data. So you can put it like I started a Bitcoin mining company where we did flare gas mitigation in the Balkans. We're in the middle of nowhere, North Dakota, and the amount of data you need to send to a pool is so small you could use cellular data, so you don't need a ton of bandwidth. And so Bitcoin, through a combination of that low-level bandwidth that's necessary to have a viable mining operation, and the fact that it is uniquely suited to monetize energy resources with location agnostic perspective is powerful. So you can monetize any energy, and that's the race of Bitcoin mining. As hash rate goes up, difficulty goes up, miners are incentivized to go find the cheapest energy, which objectively is stranded, wasted energy that's typically not on grid. And so,
and that is exactly what Quantum Expeditions is doing right now. So you know what? Marty's been doing it. Quantum is doing it right now. There's another company, Bob Burnett, Barefoot, leading the charge as well. Companies in Canada, I know, are doing this. So, yeah, this is, and get this. I was just on a space recently with a gentleman who's doing this, and the data that he shared is that just in oil and gas alone, and just this, like what we just heard Marty talking about, tapping into that alone is a $6 billion opportunity for Bitcoin mining in the oil and gas sector. A $6 billion opportunity.
That doesn't even include, you know, solar, wind, geothermal.
I know, that's what I just said. Oil and gas alone.
Exactly. And that's insane.
Off-grid flaring. Yeah.
Yeah, and your report that you did, I think, was like, it's created like all these jobs, already created like, I think 3 or 4 billion over the last couple of years. So again, this is a no-brainer because you know, Bitcoin is the future. It's going to exactly what Marty was talking about. All these countries are now going to figure out, okay, well, this is great. We have these bulk, you know, energy infrastructures, but we need to get it cheaper. We don't need volume. We need cheaper energy. So they're going to look towards, you know, hydro, towards wind, towards solar, and it makes all of those energy sources more viable because their only problems are transmission, right? That's what we've always talked about. They generate tons of energy, but it's just getting it to the right places at the right times. And Bitcoin solves that problem, just like he was saying with the SMR, where they can front load the Bitcoin miners before the SMR is online, and then you've already monetized. You've got a war chest before the company's even operational, right? That's awesome. You can even pay people day one. You hire them, like, we can pay you today in Bitcoin. Boom.
It's just a matter of the time to front run that, and that's the problem. And I was speaking with Sue Ennis over there at Hut 8 on a space, and kind of again ask her, because SMR technology has been something that I've been into, and she is just super smart when it comes to power and infrastructure and technology and all that. And again, just kind of asking, you know, how far along are we in that timeline till we start seeing, SMRs deployed, even on that level. And it really isn't going to probably be till later in the 2027, 2028, maybe, that we start seeing them come online. Because again, the cost factor has to come down as well. Yeah,
Oh,
bit
yeah, for
bonds,
sure.
yes.
I do.
Don't get me started
about,
on the bit. Don't get me started on the bit bonds, dude.
Oh, the bit bonds. Yeah.
Don't
I do want to show
go down that rabbit hole with
this
me.
clip from a show called Crypto America where they had I think it's Representative Emmer on, and it's definitely
Tom Emmer.
Yeah, Tom Emmer.
I know him.
Here, nice.
Oh, probably not the Tom Emmer you're talking about, but I went to school with a guy named Tom Emmer, and he had like the best Trans Am in the high school parking lot.
Person that we left off the list, and that's Paul Atkins, who is about to become the next SEC chairman.
It's going to be great.
Congressman Emmer, yes. So you had some quite vocal moments at the House Financial Services hearings when it came to the oversight of the SEC and Gary Gensler over the last 4 years. Those were quite memorable. And Paul Atkins is going to be replacing Gary Gensler if he gets his vote through the Senate. You said he's going to be great. Can you elaborate? I mean, is Paul going to be everything that Gary wasn't?
Not a high bar. I was just going to say, Gary set a pretty low bar. I mean, think about this. We need stable coins. We need market structure. We need to have clarity and certainty in the system so investors, entrepreneurs can, take risk and innovate. And what was Gary Gensler doing? He was stopping all of that. He was telling people, my door is open, bring any idea you got, we're happy to talk to you about it. Well, if you were naive enough to do that, he usually sued you or he sent you a letter that you're under investigation afterward. One of the things that is really, really interesting is it seems like I listened to this at length yesterday, and I'm not a big fan of meme coins, so I'm not here to advocate for them at all. But I heard a lot of complaints about meme coins yesterday during the hearing, about people taking advantage of meme coins and, allegedly misleading, whatever, and making money off of them. You realize Gary Gensler is the one that said, this is what we could use meme coins for. He's the one that actually empowered the creation of meme coins the way we see it right now. He's the one who made it okay. So if you don't like it, I agree with you. Stop complaining about it, and let's figure out how we can put some guardrails on that.
Yeah. So again, to hear that we are getting a new SEC chairman that's not going to let these shenanigans go on one side of the fence and then not go on with the legitimate side of the fence is complete malarkey, as most of us have talked about for over 2 or 3 years, where it's like he's investigating all of these legitimate companies. He did start investigating some shady ones, but now all of the charges for all these companies have now every single one has been dropped. So that's another thing why I think the crypto space is going to jump harder than the equities markets over the next couple of years, is because all the conditions that we've been looking for are there, from favorable regulations to a government that's pro Bitcoin and pro crypto, to having actually Bitcoin on the balance sheet, now talking about buying more Bitcoin for the balance sheet, talking about mining Bitcoin for America. This is, again, I don't know how many times I have to say this over the last 3 or 4 years. Bitcoin is the TransUnion Pacific Railway of the 21st century. If we do not figure this out, we will become, America will end in the next 10 or 20 years. It's a fact.
That's what Larry Fink said. If America doesn't deal with this debt and get it dialed in, the dollar is going to lose its reserve currency status to digital assets, something like akin to Bitcoin. So we got a $9 trillion payment that's due this year somebody better figure out how in the heck we're going to pay that. The idea could be bit bonds. I wouldn't be surprised. There's already Pierre Rochard over there who left. I believe he left his position at Riot, launching the bit bond company. And then, you know, bit bonds is something that is totally, there you go. Yeah. Play the video of where it was first. Yeah, go ahead, Nick.
We've completed about $50 billion worth of notional risk transfer over the last several years with many of the world's largest banks. As respects Bitcoin, I'm also thrilled to have been the founder of Battery Finance in partnership with 1031 within the next 12 months. The interest rates on that debt have dramatically increased over the last 3 years, and refinancing it at today's interest rates will create an extremely profound burden on taxpayers. Secretary Bessent has indicated his strong desire to spread future Treasury issuances across the duration curve, avoiding the risk of putting everything in the short end of the curve, as Secretary Yellen did. President Trump and Secretary Bessent have also indicated their strong interest in lowering 10-year interest rates, which have an important effect on consumer finance, mortgage finance, auto loans, as well as the federal interest expense. President Trump created the Strategic Bitcoin Reserve, and in particular directed the United States government to identify revenue-neutral ways to acquire Bitcoin. By creatively integrating Bitcoin into Treasury bonds, I would like to suggest that we can significantly reduce the borrowing costs of the federal government and defease the debt. And in particular, I would like to propose that for Americans that purchase these bonds, that they be tax-free from both interest as well as capital gains, and offer a very strong way for American families to rebuild wealth. So what's the program? It's actually pretty straightforward. $2 trillion bond issuance, 10% of the bonds go for the purchase of Bitcoin, 90% go for other government purchases. Per $100, $10.
Anyways, the big question is, you know, where does the yield come from, right? And the yield comes from either the selling of the Bitcoin, you know, over time, because the CAGR on that is, I think 1 year, again, off the top of my head, 1 year is like 66% on the CAGR. Yeah, Nick. No, Nick.
On a senior basis, that's equivalent roughly to the 10-year interest rate on treasuries today.
Oh, there you go.
And after they receive 4.5% on a senior basis, they're entitled to 50% of the Bitcoin upside, and the United States government retains the other 50% of the Bitcoin upside.
Damn, that's a deal.
What would this look like? Well, if it's a $2 trillion issuance right off the bat, that would mean $200 billion worth of Bitcoin purchased. At $90,000 per Bitcoin, that's 2.22 million Bitcoin. Of course, the price will fluctuate and likely will acquire a different amount than that, but that's at $90,000. What would this look like in terms of savings? Well, the current U.S. 10-year rate is roughly 4.5%. And the proposed rate for the bit bond is 1%, which is a 3.5% annual savings, or $70 billion on $2 trillion of total issuance. Over 10 years, that's $700 billion. On a present value basis, roughly $554 billion. If you consider the cost of acquiring the Bitcoin, which is $200 billion, that produces a net taxpayer savings on interest presently of $354 billion. In other words, the United States federal government could acquire $200 billion of Bitcoin and save $354 billion at the same time. Of course, this is just an illustration, but I think that it would be great if American families could also purchase these bonds, in addition to institutional and foreign investors. Like Tether, we learned today that they have enormous holdings in United States treasuries, and institutional and foreign investors will be attracted.
So again, one of the things they wanted to do is bring down this, the yield on the 10-year, right? And they also wanted to do that, bring down one of the things that Trump said last year that blew my mind, which made me start to realize, like, maybe I need to do my own research on Trump, was when he literally said, I want to tap out interest rates on credit cards and loans at like 10% or like 10 to 15%. No other person in American history has ever said something like that. Do you know how much that would save the American public if the banks were forced to do that? The banks will still make a killing, by the way, at 10 to 15%, not these 20 to 30% types of lending rates that they're allowed to. This is usury at plus 20%, right? Some of my credit cards are like, what, 27%? It's like, what? 30%? Are you guys? I mean, I know gangsters that charge less than that. Like, come on, this is ridiculous. And for him to actually be serious about these types of things is also the other reason I've been listening to him, because even before he said this, I want to run for president in the next election and say, no more income tax. Well, we don't need it. We really don't. If you're going to sell these bonds, if our bonds are going to be good, if we're going to make these new types of bonds, the dollar should remain strong on its own. Whether or not these shenanigans go on, like I said earlier in the show, the bonds are trading at close to 5%. Even if Russia and China dumped on us, somebody's going to buy them up real quick because that's a good spread, right? Like 4.8% on a couple $100 million. That's a lot of money.
Well said. I think we'll have to put a bookmark in the conversation for now.
All righty. Well, let's wrap it up there. I want to thank my co-host, MattySats, the great and wonderful velvet voice of Seattle. And also, I want to thank Nick and the team at Bitcoin Live. Thank you so much. Quantum Expeditions, Quantum Economics, Shieldfolio, and the team at the Organized Media and Bitcoin Live. Thank you guys so much. Have a great day. Peace out.